some of the portfolios were even down in spite of market going up very sharply yesterday. So the entire rally yesterday was led by IT stocks. The main reason why IT stocks went up was that day before yesterday, after market hours, TCS came out with the results. It was marginally better than expected. We know that the IT index was underperforming for the last 2 to 3 quarters. Most of the companies they have stopped recruiting and employee count is coming down. I'm talking about large cap IT companies. But this result, there was a surprise that the small increase in employee count margin has gone up. The degrowth has stopped, and management commentary is that from here on we may see some growth. So that is the reason why yesterday all the IT stocks went up. TCS went up by 6%, and other IT stocks also went up, which led to sharp increase in the index. In Nifty and Sensex, we have very good weightage of IT stocks. And the other reason is that the expectation was very low in IT companies. So that is why even a very small surprise makes the stocks to rally a lot. And in our recommendation, we have given one stock called Centum Electronics. So the company is a very old company in defense. They do for defense sector, then space. Many of the components are placed in very good projects in space projects. And they have an EMS division, electronic manufacturing service division, and ER&D division also they have. So why I gave this company is that it's trading at very high valuation. If you see the on PE ratio basis, it is very high, almost 58. So the last 4 or 5 years there was not much earnings. But if you see on the market cap basis, the company is trading around 2000 crores market cap. It has more than 1000 crores of revenue. If you see many mid and small cap companies in defense companies, if you see that revenues will be 300-400 crores, whereas the market cap will be 4000 crores, 5000 crores. Even in some cases, it is at 18,000 crores, 19,000 crores. A company called Data Pattern. If you see the revenue, 500 crores revenue, market cap is 18,000 crores and 19,000 crores, and they make a profit. Like that, many companies are trading at very high valuations in terms of sales, in terms of market cap if you take. Whereas this Centum Electronics, if you see in market cap basis, is actually very cheap. So that is why we have recommended these companies, even though optically it looks very expensive when you compare on PE ratio basis. And in the market, the bull run continues, and it's a classical bull market. So some of the characteristics of a bull market, we see everything in current run. I will explain one by one in coming slide. And one of the biggest positive for our country right now is the macro data are very strong as of now. Fiscal deficit is coming down, current account deficit is very less, and reserves are going up. Like that, if you see, most of the macro data is extremely strong. Government tax collections are high, and that also we will see one by one. It's not only India, most of the global markets are all-time high. World largest economy, US. If you see S&P 500, they are all-time high. Nasdaq at all-time high. And in Japan, third largest economy, their index is also doing very well. And globally, most of the markets are doing very well. Some of the European markets also doing very well. And the immediate market focus will be on the union budget. So just 5 trading days are there. Next week, Wednesday is trading holiday. So next week, 4 days, then another one on Monday. Tuesday will be union budget. So just 5 trading days are there. Till now, market is not expecting anything from the budget. Historically, if you see, whenever there is budget, previously 2 weeks back, 3 weeks back, market used to go up very sharply. Will move, individual sectors will move on basis of budget expectation. But this time there is no expectation from the market on the budget. What market focuses on that? There should not be any negative on the tax fund. That alone market is focusing, and market is not expecting from anything on individual sectors. As of now, market is not expecting anything. So just 5 more trading days are there. On index wise, Nifty and Sensex almost 5% up, mid cap around 7%, and small cap 10% up in the last 1 month between last meeting and this meeting. Bull market, I have seen 4 or 5 bull markets, 1991, 92, then year 2000, 2007, Then mid cap bull run we had in 2013 to 17, very good bull market. I have seen it, and if you see that in this priority, if you see in any bull market, if you take majority of the stocks will participate. There may be some lag will be there. Some stocks will go up immediately. Some stocks will go up a little bit lately. But majority of the stocks will participate in the bull market. Majority of the sectors will participate. Rarely, very few will not participate. For example, if you see the Hindustan Unilever, that company did not participate in a previous bull markets. I'm telling around 99 to 2000, like that. The company did not participate. For 10 years, Hindustan Unilever stock price was stagnant, and that company did not participate in two bull markets. Like that, rarely we can see. Right now, we are seeing that HDFC is not participating. Private banks like Kotak Bank is not participating. Asian Paints, some of the company which run very sharply in previous time 18, 19, they are not participating. But all other stocks, majority of the stocks, they are participating now. And other important thing that PE ratio will definitely will expand. When start of the bull market, if you see the stocks were trading at 10 PE, 12 PE, yeah, and at the end of the bull market, at the height of the bull market, if you see, they will be trading at 30 PE, 40 PE, like that. It will be trading. So PE ratio will definitely will expand in bull market, and we are seeing now. And many mid and small caps, they are trading at 60 PE, 70 PE now. And the retail participant counts will go up very sharply. That also we are seeing now. If you see the number of demat account getting opened, it's at a record high. On a monthly basis, it's going up very sharply. Similarly, number of SIP counts going up. That also increasing very sharply. So through direct participation and indirect participation through mutual fund, the retail counts are going up, and the primary market will be very active. And now also we are seeing lot of primary issues are coming, and still some big issues I am expecting. Order of 50,000 crores, 60,000 crores, like that. IPOs will come in coming months, and a select theme will run up disproportionately. That used to happen in every bull market. In 2000, this ICE sector, infotech, then communication and entertainment. All these three sectors did very well. 2003 to 7, it was across the bull market, but at the end, power and infra did very well. Now, if you see now, railway stocks, PSU themes, defense, they are going up disproportionately, and some of the select themes will run up disproportionately. And this time it is PSU theme, and which includes railway, defense, and renewable energy themes. They are going up disproportionately. So these are the characteristic of bull market, and we are seeing everything now in current market also. And this time the main highlight is the record mutual fund inflow. The retail investors from our country, throughout the country, they are putting lot of money in mutual funds, and some of the money are very long term. SIP money they are putting for 5 years, 10 years, but only time will tell. Suppose if the market falls and it stays sideways or down very sharply for 4 years, 5 years, then only we will come to know whether they will continue or they will stop the SIPs. That will be tested. Only time only will tell it whether the inflow that is coming from retail investors will continue or not. So last month it is the highest ever inflow of 40,000 crores we have seen it. So some of the money came through NFO, around 15,000 crores came through the thematic NFO, business cycle fund, then defense fund, energy fund, like that. Many mutual fund houses, they have launched it, where they able to got it huge money. Out of 40,000, thematic funds got nearly 20,000 crores worth of money got in thematic funds. That includes NFO money. So this is the highest ever monthly inflow in our mutual fund scheme, 40,000 crores in a single month. In 1992, it was this UTI master gain. At that time, some of the old investors might be there. They will be remembering UTI master gain. In 1992, they collected almost 4,500 crores at that time, more 35 years back. SIP contribution also steadily increasing. So 21,000 crores now the count starts. So few years back, it was less than April 21, if you say, it was less than 10,000 crores. So more than doubled in the last 3 years. So this trend going up will be known only when the market stops going up and it starts falling. Then only we will come to know whether the trend will go up or it will stagnate or it will come down. After 5 years, we will come to know. So the main focus now for the market is the union budget, and what right now market is not expecting anything from the budget. So no negative on the tax front will be seen as a positive. That is the main thing market is focusing. They should not change the short term and long term capital gain structure. Right now, short term is 15%, long term is 10%. Even in long term, per year up to 1 lakh exemption is there, and the prices are grandfathered as of January 2018. So market will be happy if the same structure continues. Suppose if they shift the short term gain to our income or they increase the long term gain, means we may see some correction in the market. Also, there is a big talk that there may be some relief for income tax payers, because right now many middle class are feeling that they are paying a lot of taxes. Like that, many middle class are feeling it. Those who are the main contributors of the tax collection, and they may see some relief. Maybe they may increase the standard deduction at higher level, or may slab rate they may tinker little bit. And the main focus is going to be the manufacturing sector. I personally feel that this budget is they are going to do a lot, because even before the election came, I heard that the finance ministry and individual big ministers, they have started preparing for the budget to announce a big historical budget, and in that the main focus is going to be the manufacturing sector. Already there is a talk that there are a lot of youths who are unemployed. Last 2 years, IT sector was down. In the last 3 decades, it is the IT sector which gave employment to most of our educated youths. But right now, the IT department, the IT sector, the employment opportunity has come down for the freshers. So the only way to give employment to all is in the manufacturing sector. So government will try to address that, and they will try to announce lot of shops for the manufacturing sector, so that employment opportunity will be created for the youths. Lakhs and lakhs of youths are coming out from the colleges. In Tamil Nadu alone, from engineering colleges, more than 1 lakh youths are coming out. Then we have other courses where there are also huge counts are there. If you don't give opportunity for them, then it will become a problem for the society. So the only way they can provide is the manufacturing sector, and government will definitely focus on that. And other macro data, the fiscal consolidation path will continue. The fiscal deficit in percentage term will come down. In absolute term, it will be flat. And government has indicated it will be a historical budget. I also believe they may announce big things in the coming budget. If there is no negative in the market, no negative in the budget on tax tinkering in long term and short term, definitely market will respond very positively on the budget. This is the index heavy weights, top 5 weight stocks. Nifty 50 weightage, then this is the BSE weightage percentage wise. And if you see the composition of the stocks, I personally feel that the Nifty will not fall much. Wherever you see, many of them are telling that market is at very high, there is a possibility of big correction. But seeing the top 5 stocks, I personally feel the scope for very big correction is unlikely. The first one, which has the highest weightage, is HDFC Bank. In Nifty, it is 11%, and Sensex it is 13. So HDFC Bank is actually an underperformer for the last 4-5 years, and I personally feel that HDFC Bank will not fall much from here. And if there is a possibility of MSCI weightage increase and FIIs buying, then most probably HDFC Bank will go up. Similarly, Reliance is showing extraordinary strength in stock prices, and Reliance also may go up. So these two alone is having almost a 24% weightage in Sensex and more 21% weightage in Nifty. So these two stock, if it remains steady, means there is a possibility of less fall in Nifty. Similarly, IT yesterday started going up, ITC, the valuation is very reasonable. Big correction unlikely in ITC. So based on the all the stocks, if you see on the top 5 stocks, I'm expecting that Nifty will not correct much from the current level, unless there is a big disappointment on tax front in the budget. Coming to the macro data, initially I told that the macros are extremely strong. If you see that the central fiscal health is extremely strong in the first 2 months. This is for this is that it was pre-election, just before election. Government did not spend much, so total income has gone up by almost 38% in the first 2 months. Total income has gone up by almost 38%. The main reason for that is the big income from the RBI dividend. So last year non-tax revenue was 1.3 lakh crore. This year 2.51. Main revenue is due to the RBI dividend. That has boosted the overall income of the government in the first 2 months. And expenditure, it was remained same, because generally before elections government don't uh, do big expenditure. They have some restrictions, and individual ministry have restrictions, so they don't do big expenditure. So revenue has gone up, expenditure remained same. That means that fiscal deficit has come down very sharply. Last year the fiscal deficit was 2.1 lakh crore for the first 2 months, whereas the current year just 50,000 crores. So the government spending, due to lack of government spending in the first 2 months, total expenditure almost same, whereas the income has gone up. So the fiscal deficit fell very sharply. But once the election is over, now the election is over, and the government has started spending heavily. Last month they have spent more than 1 lakh crore. They have immediately started dispersing money, and I feel that from here on economy will start improving, because the first 2 months government spending was very less. The current account deficit is another macro data. It is also extremely good. So last year, in terms of GDP, the current account deficit was -2%, whereas in the current year it is minus 0.7% of GDP, and the current account deficit has been coming down. The one reason why the current account deficit has come down very sharply is this one, the services. If you see that last year India exported 143 billion of services, and FY24 162, almost 20 billion higher. In spite of flat IT exports, the services has gone up mainly because of this global capability center exports. The services sector income has gone up. Similarly, the transfers from NRI, it's also very strong, and that is the reason why the current account deficit has come down, and the overall balance is 63 billion. This one will get added to the reserves. Every fortnightly you will get the reserves number, and whenever the current account deficit and current account is uh, current account changes comes, the overall balance it will get added into the reserves. So 63 billion reserves added in the last 1 year. And bank balance sheet also extremely strong. If you see that, this is the latest one. Main uh, ratio which everyone looks when see a bank balance sheet is the gross NPA and net NPA. What is the net NPA of banks? This is the combined all banks in our country. Is one of the lowest. Net NPA, if you see, 0.6% of the total assets. In 2017, it is almost 5.5% of our total assets. At that time, most of the banks did very badly. Bank stocks, SBI was hovering around 200 rupees, and many PSU banks, they were trading at very low price, because the NPA was very high, 5.5% of the overall balance sheet NPA, net NPA. Now that has come down to 0.6, which is the very healthy number. This one, bank net NPA. So if the NPA is very less, means what will happen is that banks has the capability to lend more money to the needy industries. So they can safely lend now, because the NPA figures are very less, and the balance sheet is very strong. Rupee also very stable. Most of the currency has depreciated against US dollar, whereas the rupee in the last in the current year, first 6 months, if you see, it is almost flat. Monsoon progress, it's also very important among the most positive macro data, one event which is likely to favor our economy in the coming 6 months is the monsoon. The first monsoon month generally consists of 4: June, July, August, and September. And most of our agriculture, rural area depends upon this monsoon rain. And June rainfall has 10% deficit, had 10% deficit, whereas July it is expected to be above normal. As on 2 days back, the overall this deficit got cleared, and overall rainfall was 0%, almost normal. South Indian had 10% surplus, Northwest has 5%, East and Northeast -4, and Central India -5. So the overall it is almost normal rainfall as on 10th July. As on yesterday, it was -3, but in next 2 weeks it is expected to be a very good rainfall throughout our country, and we are expecting that by end July the rainfall will be either normal or marginally above 2 or 3% above normal. It is expected, and the one important event where everyone was watching is the El Nino and IOD, right? Indian Ocean Dipole. Even El Nino is almost has become neutral. The La Nina has to come. La Nina is the one where most of them were expecting, and IMD has said that it will come in the month of August or September. They have told it, but the International Weather Agency, they are telling that it may get slightly delayed. It may come either in September or October. They have started telling. So if La Nina comes little late means, then the surplus rain which India was expecting, that also may get delayed. And Q1 results which are coming now already started. IT companies, two big IT companies came, TCS and HCL Tech. Actually the results were muted. TCS posted 10% growth in profits, whereas HCL Tech there was not much growth in profits due to other income. HCL Tech profits are higher, but the expectation was less. That is why stock went up. Overall, the IT sector, they are expected to post muted results, and the banks expected to post good results because their NPA is less. The provisions will come down. Overall, bank results will be good. Pharma results also expected to be good. Infra will be mixed because the government did not spend much money in April and May, 2 months because of the election. So the infra will post mixed results. FMCG slowly coming up. Last 2 years was very bad for FMCG. Now we are expecting that from here on FMCG sector also will do well, and results will be mixed. But in spite of mixed results, FMCG sector will continue to do well. Chemicals and cement will post average results. Chemicals also likely to post mixed results. Some company will post good results because of fall in raw material prices. Some company may still struggle. I am not expecting a very big earnings growth. And Nifty, overall Nifty 50 companies, many of them are expecting flat growth for the current quarter. Whereas from next quarter onwards, it's going to be very good. For two main reasons. Monsoon is going to be very good. Then the government spending is going to pick up very sharply. Even if you see the GST collection, it has come down now. The growth has come down. Previously, the GST collection used to grow around 12%, 13% like that. But in the last month, the GST collection growth has come below around 7%, which is one of the lowest growth we have seen in many months, mainly because the government spending was less in the month of April and May. Auto sales also weak. So if you see whatever micro data like auto sales, GST collection, uh, uh, most of them has posted flat growth or marginal growth, which means that the Q1 results will be average only, but from Q2 onwards the results are going to be very good. This is the auto results. Most of the passenger vehicle sales were flat. Only Toyota has shown good growth. Most of the other passenger vehicle company, if you see, Maruti is flat, Hyundai is flat, Tata Motor is negative, and Honda cars and JSW were negative. Only Toyota has shown good growth. Two-wheeler also, if you see, TVS Motor and Bajaj is single digit, whereas Hero Moto and Suzuki has done well. This is Honda motorcycle, which is an unlisted. They are Activa manufacturer, Activa vehicle manufacturer. They have done well. Passenger vehicle done averagely. Commercial vehicle almost flat. Ashok Leyland, Tata Motors, M&M, Maruti Suzuki all posted negative growth when compared to last month. So this is a very interesting chart. See, we are hearing that SEBI wants to discourage retail investors from trading. We are hearing it. So this is also one important data point why they are doing it. See, our GDP consists of four main components. One is the private government expenditure, government capital, government expenditure. Then second is the private consumption expenditure. Then the government consumption expenditure also there. Then exports. These four components consist of our GDP. And if you see that growth in retail loans of the bank, it has gone up very sharply in the last 2 years. Retail loan of the banks has gone up, whereas the private consumption, the expenditure has come down. Consumption expenditure has come down. That means people are taking loan from the banks, but it is not converting into consumption. So where is that money going? RBI did some study in that, and they found that some of the personal loans where retails are taking and they are putting in stock market. So they found that one. So they feel that doing option trading and future trading is like a gambling, and if they take loan and they do trading means it's not good for the economy for the long term. So that is why they want to discourage retail investors, and lot of steps they want to take. So they conveyed the message to SEBI, and SEBI may take some actions in coming months. And this is the valuation. And if you see the valuation, the Nifty right now is trading around 23 PE. It is trading now, and as far as the valuation is concerned, if you see, it is one standard deviation higher than mean valuation. So one standard deviation higher is not like a bubble valuation. So Nifty, maybe the valuation is higher, but not in a bubble valuation. And even if correction comes, it may be modest 10% correction, like that we can expect. It is not going to be 20% correction, 30% correction. A normal correction may come in Nifty. Valuation is slightly higher than the mean valuation, one standard deviation higher. Whereas if you see the mid and small cap, the valuation is extremely high. It is nearing to 2 standard deviation. And another interesting pattern which has happened in the last 10 years is that the valuation has gradually went up in the last 15 years. This is the 10-year trailing PE. FY27 onwards, one broker has plotted it. And if you see that, at that time, 10-year trailing PE was 14. It went up to, in next 5 years, it went to 15.5. And then in the next 5 years, the valuation went to 17.8. Then in next 5 years, again it went to 21. And then next 3 years, it went to 22.5. So gradually the valuation is going up in our country for the last 15 years. It is gradually going up. Overall, the valuation PE ratio is expanding. One reason, main reason is the retail money liquidity which is coming into the market. The bottom is the forward PE, and that also when the trailing PE goes up means naturally the forward PE also will go up. So the valuation is going up. It's not a 1 year or 2 year phenomenon. It's a more than a decade, almost 18 years they have plotted the chart, and it is, if you see that the valuation has been going up gradually every year. And this is the mid and small cap where the valuation is extremely high. The forward PE itself is around mid cap, it is nearing to 35. Small cap also, it's extremely high. Foreign flows, they are mainly concentrating on debt market right now because of huge inflow in the equity market. No one is concentrating on the foreign FA flows. No one is now concentrating on foreign institutions flows because mutual funds they are getting good money. If you see the last 1 year inflow, many months it is negative, in some months it is positive. Whereas in debt fund, they are consistently investing in debt debt market. Recently, our rupee has been included in JP Morgan index. So every month we are expecting around 2 billion inflow because of the inclusion. And debt market they are investing, whereas in equity market it's up and down, and most of the months it is negative. Globally, if you see that, one interesting pattern which is happening is the Japanese market. So their currency has depreciated almost 50%. The yen, 2 years back it was around 100 and between 100 to 110. Now it has come to 160. So the implication of the sharp Japanese yen depreciation against dollar, it has to be seen. I am trying to search it, but nothing material I am getting it. No one is commenting on that. But without any reason, third largest economy currency, if depreciates like this, means some global implication may happen in next 1 or 2 years because of the sharp fall. Some countries may get affected because of this. Because in 1970s, 80s and all, Japan is one of the leading exporter to US. At that time, China was not there, and if you see most of the companies like in white goods, uh, in electronics item, most of the exports throughout the world happened from Japan only. Big companies like Sony, National Panasonic, Sanyo, like that big companies were there which were exporting from Japan to throughout globally. And after then China came, then Japanese economy bubble busted and collapsed. Again now this Japanese yen has weakened a lot, and whenever a currency weakens a lot, means what will happen is that it will boost to exports. So we have to see what implication it will happen to other countries which are competing with Japan. Japan and Japanese auto companies did huge exports in 1970s and 80s to US market. Now they are not doing much exports because of the competition came, and Japanese economy itself fell in trouble, and their currency appreciated. Now again the depreciation happened now recently, and we have to see next 2 years we will see the implication on other countries. And Nikkei, after many years, again touched their previous high. Now their market is doing very well. Now it has crossed to 41,000. Previously, in 1986, it touched to 40,000. It was in a bear market for many decades. Now only again it is coming up. So one side the currency is depreciated sharply. The again say on the other side the Nikkei Japanese stock market is doing very well, and we will see the implication in next 2 3 years, the impact of this. And data to watch: Union budget on July 23rd. Just 5 more trading days is there. Q1 results. So Q1 results, except a few sectors like pharma and others, most of the results likely to be muted only. There is no big expectation in Q1 results. And monsoon progress, July will be a very good month, and many sectors which are related to the agri will do well because monsoon is expected to be very good. Thank you.